Building wealth isn't just about making money, it's about keeping and growing it over time. The world's wealthiest individuals don't gamble their fortunes on risky stock picks or short-term trades. Instead, they rely on one of the simplest and most effective investment strategies: index funds. These funds provide consistent, long-term returns with minimal risk, making them the go-to choice for financial success. But why do millionaires and billionaires favor index funds when they have access to the best financial advisors and investment opportunities? The answer lies in a combination of steady growth, low costs, and the power of compounding. Today, we'll break down the real reason wealthy people choose index funds and how you can use this strategy to multiply your money. And before we dive in, don't forget to like and subscribe for more powerful wealth-building insights that can change your financial future. 1. Index funds offer the best long-term growth with minimal effort. Wealthy individuals know that the stock market rewards patience, not speculation. Instead of chasing short-term gains or trying to pick the next winning stock, they invest in index funds, broad market funds that track well-established stock indices like the S&P 500. These funds include hundreds of the top-performing companies, ensuring diversification and steady returns. Over the last century, the S&P 500 has delivered an average return of about 8 to 10% annually. This means that money invested in an index fund grows steadily over time, compounding year after year. Wealthy investors prefer this approach because it doesn't require constant monitoring or market timing. They simply invest consistently, let their money grow, and watch as compound interest does the heavy lifting. 2. Low fees mean more wealth retained over time. One of the biggest killers of wealth is high investment fees. Many actively managed funds charge excessive management fees, which can eat into returns over time. While a 1% fee might not seem like much, over 30 to 40 years, it can cost an investor hundreds of thousands, or even millions, of dollars in lost earnings. Wealthy people understand this and opt for low-cost index funds, which have some of the lowest expense ratios in the industry, often less than 0.1%. This means more of their money stays invested and compounds over time instead of going into the pockets of fund managers. By simply reducing unnecessary fees, they secure better financial growth without taking on additional risk. 3. Diversification protects wealth from market volatility. Risk management is a key principle in wealth preservation. While individual stocks can skyrocket in value, they can also crash overnight. Wealthy investors know that putting all their money into a few high-risk stocks is a recipe for disaster. Instead, they spread their investments across hundreds of companies through index funds. By diversifying their holdings, they reduce the risk of losing money due to a single company's poor performance. Even if a few companies in the index struggle, the overall market continues to grow. This is why index funds are considered one of the safest and most reliable ways to invest for long-term wealth. 4. Warren Buffett and other billionaires recommend index funds. If billionaires are using index funds, why wouldn't the average investor? Warren Buffett, one of the greatest investors of all time, has repeatedly stated that index funds are the best investment choice for most people, including the wealthy. He even instructed that 90% of his wealth be invested in an S&P 500 index fund for his family after he's gone. Buffett's logic is simple. Index funds outperform most actively managed funds over the long run. While some hedge funds and stock traders may beat the market for a few years, very few do so consistently. Index funds remove human error and emotion from investing, ensuring steady and predictable returns. 5. Compound interest multiplies wealth exponentially. The wealthiest individuals understand the magic of compound interest, the process of earning interest on both the initial investment and accumulated returns. The longer money is invested, the greater the compounding effect. For example, an investor who puts $500 per month into an index fund with a 10% annual return will have over $1 million in 30 years. But someone who invests the same amount and starts 10 years later will only have half as much. Wealthy people take advantage of this principle by investing as early as possible and letting time do the work. 6. Market timing is nearly impossible. Index funds remove the guesswork. Many people try to beat the market by timing their investments, buying when prices are low and selling when they're high. However, even professional investors fail at this consistently. Wealthy individuals know that trying to predict market movements is a losing game. Instead, they follow a disciplined strategy called dollar-cost averaging, investing a fixed amount into index funds at regular intervals, regardless of market conditions. This ensures they buy more shares when prices are low and fewer when prices are high, reducing risk and maximizing long-term gains. 7. Reinvesting dividends boosts growth automatically. Many index funds pay dividends, profits that companies share with investors. Instead of taking these dividends as cash, wealthy investors reinvest them into the fund. This simple step accelerates compounding, helping their investments grow even faster. For example, if an index fund pays a 2% dividend yield, reinvesting those dividends can significantly increase returns over time. Many brokerage accounts allow investors to set up automatic dividend reinvestment, turning passive income into an even bigger investment. 8. Index funds provide financial freedom with less stress. Wealthy people value their time. Instead of constantly monitoring stock charts, analyzing company earnings, or worrying about short-term fluctuations, they choose index funds because they require minimal effort. Once set up, an index fund portfolio can grow automatically without daily decision-making. This approach allows them to focus on other wealth-building activities, such as business ventures, real estate, or simply enjoying life. Since index funds naturally follow the overall market's growth, they provide financial security and passive wealth accumulation without stress. 9. The simple formula for long-term wealth with index funds. The strategy wealthy investors use with index funds is incredibly simple and effective. Invest consistently, regardless of market conditions. Choose low-cost index funds that track major stock indices. Reinvest dividends to maximize compounding. Avoid panic selling during market downturns. Let time and compound interest work in their favor. By following these 5 principles, they steadily build wealth over decades, achieving financial independence with minimal risk. 10. Anyone can use this strategy to build wealth. The best part about index fund investing is that it's accessible to everyone, not just the wealthy. Whether you're starting with $100 or $100,000, the same principles apply. By consistently investing in index funds, reinvesting dividends, and letting time do the work, anyone can build a fortune over the long term. You don't need a high salary, insider knowledge, or stock-picking skills. All you need is patience, discipline, and a commitment to the process. The sooner you start, the sooner you'll see the benefits of compounding. Final thoughts. Make index funds work for you. Wealthy individuals don't waste time trying to outsmart the market or chase short-term gains. They build their fortunes using simple, proven strategies, investing in index funds, minimizing fees, and letting compound interest grow their wealth. This approach is not only stress-free, but also highly effective. If you want to achieve financial freedom and multiply your money, take a lesson from the wealthy. Start investing in index funds today. Your future self will thank you. And if you found this video valuable, be sure to like and subscribe for more wealth-building insights. The journey to financial success starts now.